So good morning, everyone. Welcome to this webinar on the key findings and sector perspectives in microfinance in Europe. So we have almost 50, a bit more than 50 participants now who are connected. So that's great. Welcome everyone to the webinar. Thanks a lot for joining. I'm Anastasia Kozarenko. I'm associate professor at MBS School of Business, which is based in Montpellier. I'm also heading the chair in social and sustainable finance in the MBS. And I'm also a member of EMN Research Committee for a few years now. And it's a pleasure for me today to moderate this webinar. Today is the release of the 12th edition of the report, which many of you might know is a joint work by EMN and MFC, the European Microfinance Network, and the Microfinance Center, with the financial support by the European Commission and the European Investment Fund. A few words before we start about the background of the report, so we can move to the next slide. As I was mentioning, it's the 12th edition, but it's the 6th one, which is developed by EMN and the MFC. I invite all of you, if you are willing to have more details about the results of the report, to go ahead and download it. It's available on the EMN website. I think you will also have the link in the chat, but anyways, there is a link also at the end of the presentation in the slides. So please don't hesitate to go and explore further the results. It's really an amazing resource for all the stakeholders, for microfinance institutions. So don't hesitate to go ahead and read it. And then also there is the dashboard, which is an interactive way to explore the report. So again, don't hesitate to use this tool as well. So I just remind that the webinar is recorded just for everyone to be aware of this. And also it's an opportunity for you to have access to the presentation later on. Before we start the presentations, I would like to say a big thank you to the microfinance institutions that participated in the report and provided their data. I know it's time consuming. I know it's not always easy to find the resources to participate, but it's a huge resource for academia, for the founders, and for MFIs themselves. So thank you so much for providing your time and participating. Also for the networks, which put a great effort in data collection and giving incentives to microfinance institutions to participate. So thanks a lot for all the networks here presented on this slide. Also, thanks a lot to the sponsors, of course, the European Commission and the EIF. And then, going back to the importance of this report, it's very important for academia. Me as a researcher, I use it in my teaching, for instance. And we also use the data from the report and from the data set to develop papers, academic papers, and publish them in academic journals. So that's a great resource for us, but it's also a great resource in terms of advocacy to develop the sector. And of course, for shaping the programs, the support programs for the sector. And today we are very lucky to have the representatives of the main support organizations. So we have 4 speakers from the support organizations. So we have Jaime Duran Navarro from the European Commission. We have Cristina Dumitrescu from the European Investment Fund. We have Bruno Robino from the European Investment Bank, and Kristina Maslauskaite from the Council of Europe Development Bank. We also have, of course, the contributors to the report, who are Justina Pitkovska from MFC and Nicola Binaglio from the EMN, who will present the results, and then the 4 speakers will react to the results that will be presented. So we can go to the agenda. Just a few words to introduce the agenda. We will proceed in 3 main blocks of results. So the first block will be on coverage, scale, outreach, and portfolio quality. Then we will go to the second block on social performance and green microfinance. And then we'll go to the third block on challenges and needs. In terms of the interaction with the audience, there are 2 possibilities. You have the chat, which is open, so please don't hesitate to use it and put your questions, put your comments throughout the entire webinar. If we have time, we might address some of your questions during the webinar. Otherwise, we also have a Q&A session of 15 minutes at the end of the presentations, where we will have the opportunity to address some of the questions. And also, if you wish to raise your hand and ask your question directly, don't hesitate to do so. I guess we can start with the first block on scale and outreach, which will be presented by Justyna Pitkowska. Justyna, the floor is yours.
Thank you. Good morning, everybody. Let's start the presentation with a few words about the methodology. We collected the data through a survey which was circulated among microcredit providers, and for the simplicity, we called them all microfinance institutions, although they are engaged in microfinance provision to varying degrees. Most of them are fully committed and focused only on microfinance provision, but we also have some institutions which provide microfinance as part of their activities and services to the other segments of businesses and populations. Survey is about microfinance in Europe, and it covers countries which are EU member states, but also candidate and potential candidate countries, as well as EFTA countries. We collected the data in the second half of 2024, and the data refer to the end of 2023. How do we define microfinance? Microcredit is about 2 types of loans: business microloans, which serve the purpose of supporting business needs, and they can be disbursed either to natural persons or legal entities, and the maximum size of the loan at the disbursement time is 50,000 euro. But we also have personal microcredit, and these are microloans which are disbursed for the purpose of supporting personal and household needs, such as education, mobility, housing, and such loans are below 25,000 euro at disbursement. Our survey covered 191 institutions from 30 countries. Almost half of them, 47%, were located in Eastern Europe, and another 29% in the Balkans. Across the institutional types, we have 41% of institutions operating as non-bank financial institutions and BFIs. But we also have NGOs. A quarter of the institutions are non-governmental organizations. We have also credit unions and banks in the sample. Now, about the findings. Let's start from the staffing. First of all, we can see that the majority of the MFIs are small in terms of the number of employees. 71% of the MFIs employ below 50 staff. And there is a quarter, 32% of MFIs, which have up to 10 staff only. Women constitute 67% of paid employees, and we observe lower shares of women among managers, 58%, and board members, 42%. As to the size of the microloan portfolio, we observe that the total portfolio reached 7 billion euro at the end of 2023. And as you can see on the graphs, we have one very large player, a microfinance bank, which managed 2.6 billion euro of the microloan portfolio player. Apart from the bank, we have quite a big size of the loan portfolio in the Balkans and in Eastern Europe. In terms of the institutional types, apart from the largest bank, the biggest share of the portfolio is managed by non-bank financial institutions. Active borrowers number reached 1.5 billion. Again, we have one large provider. Without this institution, the total number of active borrowers is 1.1 billion. Over half of the active borrowers are served in the Balkans, and they are served by NBFIs. I mentioned earlier business and personal loans. So here in this slide, we can see to what extent MFIs engaged in business and personal microloan provision. On the left-hand side, you can see the graph where we are showing the number of MFIs providing each type of service. So half of the MFIs provide business microloans only, not personal loans, and 33% provide both business and personal loans. And altogether, business loans constitute 70% of the gross microloan portfolio, and we excluded the largest, we excluded the largest bank from this calculation so that it doesn't overshadow the picture of the other institutions. The average loan balance in all countries across all types of loans, the average loan balance is 8,000 euro. Personal loans are smaller, on average 3,000 euro, and business loans are on average 12,000 euro. And as you can see, both business and personal loans on average are well below the threshold of 50,000 for business and 25,000 for personal microloans. Non-financial services are provided by 68% of the institutions, and such non-financial services are training, consulting, coaching to existing businesses, to startups, aspiring entrepreneurs, and also to individuals. And in case of individuals, non-financial services usually refer to personal or household budget management. Portfolio quality of the institutions. We used portfolio at risk 30 indicator, which showed that on average the portfolio at risk is at 12%. There are some differences between business and personal loans portfolio performance, with business microloans segment performing better on PAR 30 indicators, but not on the other indicators. So basically the portfolio quality is mixed, depending on the type of the indicators that we are using. And now for those who are interested exclusively in microfinance in the EU member states, here is the brief summary, which excludes the largest bank. So in short, microfinance in the EU countries is seen in 22 member states. We captured the information from 128 institutions. The vast majority of them are very small, with up to 50 staff. The total gross microloan portfolio is 2.4 billion, and they served over 300,000 borrowers. The vast majority of the portfolio is in business lending, and most of the MFIs provide non-financial services in addition to microloans. And the portfolio quality par 30 indicator is at 14%. How does it compare to the non-EU countries? There is a smaller number of institutions in non-EU countries. They are usually a bit bigger. Their portfolio is at almost 2 billion, which is a bit smaller compared to the EU total, but they serve a bigger number of borrowers. They provide both business and personal loans, and the personal microloan portfolio constitutes a significant share of the total portfolio. They are less often engaged in the provision of non-financial services, as less than half of them have any type of training, consulting, mentoring, or so on. And the portfolio quality is better in non-EU countries compared to the EU member states. So that's a brief summary of the findings about outreach and scale of microfinance services.
Thank you very much, Justina. Let's see about the reactions of the speakers. So I will invite first Jaime, if you would like to react from the European Commission, and then if we have time, I will also give the floor to other speakers. Thank you.
Thank you very much for the invitation, and I join the thanks to all the institutions who provide the data, the institutions who help to collect the data, and of course to EMN-MFC, Justina and Nicola, on preparing the report, because as Anastasia said at the beginning, for us it's a very important policy tool. And I'm going to share with you more or less the importance of this data on the feedback I can provide now. For example, in the survey, there is 22 out of the 27 EU 27 countries. It represents the 129 institutions. It represents an average of 6 per country. The region more represented is Eastern Europe, then Northwestern Europe, and finally Southern Europe. The number of institutions per legal type is a majority non-banking financial institutions, and most of them are in Eastern Europe. Then the other three, the banks, the credits, and you're more or less the same. And but banks are more than half are in Northwestern Europe. The borrowers, yeah, we were talking about 708,000. But then if you look at the countries, you see that Spain, 407,000. There is a big institution there that provide most of them. Then we have Romania, 114, France, 94, Lithuania, 28, Italy, 13. That's very interesting for us to know this granularity, no? The portfolio, yeah, you said 5 billion. Then you see the distribution. You see Spain with 2.6. It's more than half, and that's very important to know. But it's also important to know that in Romania, 724 million, Lithuania 377 million, France 325, Poland 165, Germany 160, Italy 143. Because this data is very important for us to discuss with the managing authorities. I mean, with the governments. What represent in each country. The portfolio per type of loan, I mean, in all the regions in Europe, the majority is the business microcredits, which is I think is a good news. The financial performance, part 30 is not so important, it's 14, but in part 90, it descends, the rate of review. It's not bad. I mean, yeah, even if 14 is high, it's not something to worry. Very interesting, the non-financial service, no? That 88% of the institutions in Southern Europe provide BDS. That's fantastic. And that the NGOs are the ones who provide the highest number, no? 88%, and they have the more balanced service, pre-loan, during loan, and post-loan, no? Followed by non-banking financial institutions. All this data is for us is very, very important. And as Justina said, the comparison with the Balkans, it was very good because that allowed me first not to look to the EU27, but to compare with the Balkans. And then we see the portfolio for sure is higher in the EU, no, with 5 billion for 2 billion in the Balkans. But then very interesting, there are more beneficiaries in the Balkans than in the rest of the EU27. The type of institutions are not so different. We have the highest non-banking, as said in the EU27, is the non-banking financial institutions. In the Balkans are the NGOs. That's also interesting, but non-financial service, they provide less than in the EU. The portfolio quality is better in the Balkans, in all indicators, per 30, per 90, and the write-off. And in the Balkans, the business loans are lower than the personal loans. No? So that's interesting. So first insight from the comparison is that because it's good to learn, and that for us, for the European Commission, it's very important to know how are the Balkans because they're going to be in the session. Most of them are session countries, so they will be part of the microfinance sector, I hope sooner than later. And not only we have to reinforce them, but we also have to learn from them. No? So I see that how they're able with less institution to reach more beneficiaries and how the financial performance is better. So thank you very much for this presentation, because as I share with you, there is from the policy perspective, is very interesting to us, and there is a lot of insights that are very useful to strengthen the sector and to collaborate with the Western Balkans. Thank you.
Thank you very much, Jaime. Maybe I would like to add one thing concerning what Justina presented about the average loan size. I think it's interesting also to take into account that we might have ceilings for the loan sizes at the national level. For instance, in France, until recently, we had the business loans which were limited by a threshold of 12,000 euros. Today, it's 17,000. So this might explain why the average loan sizes are so small as compared to the European definition, which was 25,000 before and then 50,000 today. So yeah, this is another thing which is very interesting to explore. And yeah, thanks a lot, Jaime, for your feedback, which is a feedback more from a regulator or somebody who shapes or designs the support programs and uses the data as a policy tool. So it's very interesting to have this perspective. Let's see from the speakers from EIF, EIB, or CEB, we have any reactions. Otherwise, we can also move to the chat. Christina or Bruno, if you would like to react.
Christina first.
I was thinking there are I forgot the number, to be honest. 1 million and something entrepreneurs served mentioned in this survey.
1.5.
1.5. Thanks a lot, Bruno. 1.5 million entrepreneurs served. But if I recall the missing entrepreneurs study prepared by OECD, in the last publication 2 years ago, I think, they mentioned the missing entrepreneurs in Europe are in the range of about 7 million. So there is a huge market potential there that should somehow be tackled one day.
Bruno, yeah, thank you, Christina. Bruno?
Yeah, and for me, no, very quickly, 3 things I retain. First of all, I'll join Jaime to congratulate EMN and MFC and all the national networks and the ambassador. The number of surveyed increased considerably compared to last year. I guess it's an increase of 13%. So it's a huge effort, and which needs to be first of all noted and welcome and congratulations. The second point, which again, I'm trying to do a bit of comparison and trends of last year, although the sample base is a bit different, but the microloan portfolio reached 7 billion, we heard. It was at 5.3, which is a huge increase compared to last figures. We're talking about a good 30%. And another point which probably it's interesting to know, so we see that on the non-financial services, 68%, but it was for the survey of last year, it was a 76. So there is room to understand why there was such a bit of a decrease compared to the previous survey, but I guess it's a function of a different sample. And I stop here because there are a lot of comments, but I'll stop here.
Indeed, there is the issue of sample. Unfortunately, we don't have the same MFIs from one survey to another, so we cannot really have a panel data set, but yeah, it's already great, as I mentioned, to have 191 MFIs participating. I completely agree. Thank you very much for your feedback. I guess we can move to the second block of the results on social performance and green microfinance. And now I give the floor to Nicola.
Yes, thanks a lot, Anastasia. I hope you can see my
Yes.
my screen. Good morning, everyone. And yeah, I'd like to start with some insights on the social performance of MFIs. And this year we paid special attention to the business microloans and the types of entrepreneurs supported with business microloans. And I'd like to start building up on what Justina shared before, and also where Anastasia reacted on the average loan size, and focusing exclusively now on the business microloans. And you would see on the graph on the left the different average loan size for the 4 regions that we consider in the report. And on the graph on the right, you would see the same statistics which were adjusted to try to take into consideration the different economic context of the countries which are included in the different sub-regions. And in order to do so, we divide the average loan balance by the gross national income per capita. And this results in a percentage. And this percentage can be considered as one of the proxy to understand outreach to low-income population. So the smallest the percentage, the highest the outreach to low-income population is. And so when we look at these two charts in parallel, you would see that even if the threshold for Southern, Northwestern, and Eastern Europe, it's pretty much similar. It's between 13,000 and 14,000. When it comes to the outreach, you would see that the deepest outreach is seen in Northwestern Europe, followed by Southern Europe. If you look at Eastern Europe and Balkans, they share a similar percentage, and this can be seen as a suggestion of the fact that they might focus on entrepreneurs that have slightly higher financing needs compared to the other 2 regions. If we now try to look closely at the type of business clients that are served by MFIs, what stands out from the survey is the fact that, and it's kind of a confirmation, the fact that MFIs primarily serve the smallest entrepreneurs. On average, 53% of the business clients of MFIs are individual entrepreneurs. And for the individual entrepreneurs, we mean self-employed people, informal business owners, and farmers. The second most common category are small enterprises with less than 5 staff. And on average, 35% of the business clients are a small enterprise with less than 5 staff. If we zoom in now on the demographic profiles of the individual entrepreneurs only, what we can see is that on average, women represent half of the individual entrepreneurs that are served by MFIs with business microloans, and that 1/3 of the entrepreneurs are located in rural areas. Also, it's interesting to see that MFIs tend to serve older entrepreneurs more than young entrepreneurs, and that on average, 1 out of 10 entrepreneurs served by MFIs has a migration background or is coming from an ethnic minority group. In this edition of the survey, we not only focused on the characteristics of the entrepreneurs, but we also wanted to see if and how MFIs are tracking the impact of their work on the entrepreneurs they support and also on the households that they support. And what we see is the fact that 83% of the MFIs track impact indicators, and on average, MFIs that do so track on average 3 impact indicators, and the most common one are related to variation in income level and number of job created and jobs sustained with their support to businesses. It's also interesting to underscore the fact that not only MFIs track those indicators, but they also include them in business plans and their strategies. And also the fact that these impact indicators are primarily reported to their board of directors and also to external funders. One finding which I found very interesting is the fact that only half of the MFIs report to disclose these results to the general public. And here there's probably a missed opportunity for MFIs to communicate on the good work they are doing and to increase the transparency towards the public, the general public. I'll now move to very briefly on the environmental performance of the sector. For the sake of time, I'll just focus on the products and services that are offered by MFIs. And the first insight is the fact that 2/3 of the MFIs currently engage in the provision of green microloans. This is done either through dedicated products or the regular offer of business and personal microloans. Another element which is worth stressing is the fact that among those MFIs that currently do not offer those loans, 50% of them are planning to do so in the coming 2 years. And so these really confirm the overall engagement of the sector in offering those type of loans and supporting entrepreneurs and families even more with this with green loans. And also this is confirm a trend which was also seen in the previous editions of the survey. If we look at the type of purposes for which green microloans are supported, are disbursed, we see that loans for renewable energy and energy efficiency are the most common one, followed by loans for mobility, so to purchase or lease electric vehicles, and loans for sustainable agriculture. And then to conclude on the non-financial services that were mentioned a few times before, here when it comes to green non-financial services, the statistics related to the offering of these services are slightly lower compared to the overall statistics on non-financial services. Only 44% of the MFIs currently engage in those type of offering, and when they do so, they primarily run educational type of activities to raise awareness among entrepreneurs on the negative impact of their activities on the environment, or to raise awareness on the risk related to climate change on their work and how to prevent those issues. So I'll close it here and give the floor back to Anastasia.
Thank you very much, Nicola. So in terms of reactions, I would like to give the floor to Christina from CEB, if you would like to give us your feedback.
Yes, thank you very much. And of course, I joined in congratulating the networks and the sector for producing this report. For us as well, as a funding provider to the sector, it is very important to see the developments, the geographic scope, and we also engage in comparing between years, as Bruno has done, because it's very important to see the evolution of the sector. And I am particularly grateful that this year there was much more focus on social output and income measurement, which I think for the sector is crucial, especially these days where the social considerations are not at the very top of the policy agenda. So it's very important for us to be able to get the story right. So just maybe to react to a couple of points that Nicola presented. There are so many that I will just have to choose a few. From the depth of outreach, I thought it was a very interesting way of presenting the outreach of business loans according to geography. The data suggests that it makes sense provide support to microfinance institutions, even in the richest geographies, because they really do focus on the more vulnerable entrepreneurs. So this is very helpful for us to build a good narrative and to really see why we're doing what we're doing. Other than that, what really surprised me from all these tables on different types of measurements and typology of clients is that the number of responses was very low. So if we speak today of the overall survey of 191 microfinance providers, here we see the response rate of 40-32. So it's really a quarter of the sample, which is then very difficult to extrapolate to make any relevant conclusions. So I'm just wondering, whereas, for example, I'm very happy to see that 45% of business clients are women, which we know is much higher than the general female entrepreneurship rate across Europe. I am perplexed why only 32 microfinance institutions could provide responses to that question, because it would seem that it would not be so complicated to do. So this is really surprising for me, and it's a bit, it's a pity, it's a missed opportunity that we cannot provide a stronger story, at least on female entrepreneurship. And I'm wondering if it's because we have so many categories of different types of activities, and then maybe the institutions could not answer them all and just left it out. Because I think the one on female entrepreneurship in particular would be very useful to know. On the impact indicators, here I was glad to see that 94 institutions actually provided the response. However, we see that 17% do not track anything, and this is also interesting that, you know, some of them really do not have any social indicators, whereas the others do provide, but at the same time, only 1/3 of them can report on the jobs, on the number of jobs created or maintained. This is also a bit of a pity and a missed opportunity. And then when we will go to the next section of the report, we see that only 10 of the MFIs report the need for capacity building to measure social impact. So this is also quite perplexing. They cannot report social impact, and they do not report the need for capacity building. So I'm just wondering what are the reasons behind these findings. So these are just some initial thoughts that I wanted to share. Overall, it's really very good, and I would really encourage to continue tracking all these different social indicators, because they are really useful for us.
Thank you very much, Christina. I think the issue that you raised with the response rates is very important, So I agree that overall we have an increase in the respondents, as mentioned by Bruno. We are 191 MFIs in the report now. But when you go to particular questions and the ones which seem quite easy to answer, like the proportion of female borrowers or entrepreneurs, we indeed have a drop in the respondents. So because it's such an important issue, maybe I can ask Nicola or Justina if you have any explanation or any intuition about why do we have this drop in the responses for particular specific questions.
You want me to go, Justina?
Yeah, please.
Yeah, one of the explanations can be related to the different tools that we prepare in order to gather responses. And you know, it's we have different target groups when we send out this our questionnaire. We have organizations where we have closer contact, whilst others are less, let's say, engaged, and therefore we try to design free, a questionnaire of different length in order to maximize the number of responses that we can get. But obviously, some of the questions are not included in the free type. Were not included in all the free type of questions that were sent out to MFIs, and that might explain some drop in the response rate. So this is, of course, part of a reflection that we should have also all together with the stakeholders on how we want to manage this, the trade-off between having very a big number of organizations responding, and also many topics that we want to explore, and keeping a high response rate for all these topics. This is, I think, we will invite also our partners to join this reflection and to strategize a little bit on how we want to take care of this in the coming editions. And please, Justina, feel free to complement what I just said.
Yes, if I may add that we also observed survey fatigue among the MFIs, which report to so many stakeholders and participate in so many surveys and research activities, interviews, that they find it hard to answer to all the requests. So we try, of course, we try to send all the questions to many MFIs, but then seeing no reaction or limited reaction, we try to shorten the questionnaire to get the information to the basic data requests, like portfolio, generally the size of the MFI. And we don't ask them for more detailed questions, even if, as Anastasia said, they're very easy to answer. They still require attention, sometimes checking in the data set, sometimes reflecting or asking the other people for their opinion if we have questions related to the plans for the future, preferences, attitudes. Even if the questions are simple to answer, they still require attention and time of the MFI representative.
Thank you very much, Nicola and Justina. We still have a few minutes for reaction from Christina or Bruno or Jaime, if just one of you wishes to react.
Yes.
Yeah,
I would like to intervene. Well, first is that that's a problem. Every time reporting on social is not the priority for most of the institutions, and we suffer also that even when we are doing receiving the reporting of EC, they provide all the information on financial, but social very few reported. It looks like it's not important for them. Okay, and that as a sector we have to react to that. Okay, microfinance is not putting money on the market. We have banks for that. Microfinance have a social goal. We are serving people. We are in the social window. So we're gonna start taking measures. Maybe it's our fault. We didn't ask, or I don't know, or we were not serious about this issue. But let me tell you, we want to support the ones who deliver. not loans, microcredit, supporting people, helping the vulnerable, helping everything. There is plenty who are doing a very good job. And if you show to us, we will help you, we will support you. If you don't show to us, let me tell you, you will not be a priority for us. This is a clear message. Okay, we are here for the ones who deliver, the ones who work. This is a policy area of the EU, social window. We have to remind that to the organizations. And we're going to start implementing measures for that. I mean, thank you to the ones who reported, because we will help them. I mean, we're not here to judge, okay? So if you need training to do development service, we will help you. If you don't know how to reach a certain group of vulnerable people, we will help you. But please share with us, okay? Because if you don't report to us, we think that you are just not delivering to the vulnerable groups. Okay, that's very important for us. So okay, I mean, how can I defend? I mean, we have to defend now to the next MFF. What numbers? You don't provide that with numbers. What can we do? How can we defend that there is a need of supporting the microfinance sector? When there is, yesterday we were with Regio, and they have money, but for SMEs, and they say, yeah, but it's more or less the same. How can I defend the microfinance sector if I cannot say, no, it's not the same, because we're working, we're supporting these minorities, we are supporting this percentage of disabled people, all that. I don't have it. If you don't provide me, then move to Regio. Okay, yeah, it's true. They're not aware of what is happening. So please contribute to the survey, because it's, as I told you, it's our policy tool. Don't be ashamed. Okay, if you need support, ask. And we have SIFTA doing a great job. We have the networks with the change programs and everything. But please, if you do your work, share it. If you don't do it, start working on that. Sorry.
Thank you very much, Jaime, for such a clear message and strong message. I think we all agree, and hopefully it will have an impact for the next editions of the survey. I think we should move to the third block of results. And then if you want to react to Jaime's message, we will have time to do it afterwards. So we can go to the third block, looking ahead, which will be presented both by Justina and Nicola. Justina, the floor is yours.
Yes, so I will start with presenting the needs for additional funding. So as I mentioned earlier, we collected the responses at the end of 2024. So all the information in this section referring to challenges and needs are as of the end of 2024 onwards, while the numerical data were as of the end of 2023. So in terms of the need for borrowings for on lending, we can see that 80% of the surveyed MFIs need some kind of some funding of different values. On the left end of the spectrum in the chart, we have 34% of MFIs which need no more than 5 million euro per MFI. And on the right-hand side, we can see that 24% of the MFIs need more than 30 million. So there is a wide range of funding needs in terms of the ticket sizes. In the next slide, we have information about the demand for equity funding, and here only 42% of the surveyed MFIs said that they need additional equity, and most commonly they needed between 500,000 and 10 million euro per MFI. Thanks. And Nicola, now you're, sorry, I forgot. Capacity building needs. So we also asked about the topics in which MFIs need support to improve their capacity. And 59% of the MFIs said that they need support in digital transformation. And 50 MFIs need capacity building in green finance and climate risk management topics. And the other topics like fundraising or impact were voiced by a smaller number of MFIs, 35% each, and then regulatory compliance, 15%, and expanding outreach, 12%. So much lower number of MFIs. Thank you.
Thanks, Justina. So here I'd like to continue this part by sharing some insights related to challenges and needs related to impact assessment and green microfinance. So we asked MFIs which are the main challenges for them when it comes to initiating an impact assessment within their organization. And what we can see as main reason, as main challenge for MFIs is related to data availability and quality. So MFIs do struggle when it comes to engage clients in providing data, 59% of them. And related to this first point, MFIs also have issues when it comes to the quality of the data that are gathered that are insufficient in order to draw meaningful conclusions. Another challenge, which is common, 41% of the MFIs, is related to the lack of resources that MFIs need in order to start investing in their impact framework and the related tools that are needed in order to collect and process the data. We also asked MFIs what they would need in order to start or improve in impact assessment. And here there are a few points that stands out quite clearly, and then they are interconnected between them and also linked with the previous challenges. So the first need for MFIs is related to technology. MFIs will need technology to manage and analyze the data gathered. So we're talking here about apps or software to be used by MFIs to engage more in impact assessment. The second type of support needed would be some sort of financial support to pilot their initiatives around impact assessment, to refine them and also to refine the processes related to these initiatives. And then the other 2 points which are quite common, are related to the strengthening of the skills, of the internal skills of the organizations. So this can be done either through capacity building or by hiring external people that can support MFIs in building their impact frameworks. Also, MFIs are not only engaging or try to engage in impact assessment, but they are also expected to conduct other assessments or certifications in order to prove their performance to the public and to the main stakeholders. So the code is the most common certification that was obtained in the last years, and also the most common certification that is planned by MFIs. But we also have ESG assessments and other type of ratings. So what we see here is that access to external resources is really key in order to facilitate the implementation of those certifications by MFIs. Only 28% of the MFIs have the internal resources to cover the cost related to certifications and assessments. whilst the rest of the MFIs have to rely on fully on external resources, 45%, or a combination between internal and external resources. So there's a sort of tension between the need to demonstrate the impact and also the resources that are needed in order to perform these certifications, and this might be an issue in particular for the smallest organizations. Then to conclude, a slide on green microfinance and the support needed by MFIs to increase their offer of green loans. So here we can clearly see that MFIs would need technical assistance and portfolio guarantees as a first type of support, but also they request grants, for instance, to reduce interest rates on certain green loans, or to maybe pilot certain initiatives related to green non-financial services. So I'll close here and give the floor back to Anastasia.
Thank you very much, Justina and Nicolas. So I would like to give the floor to Christina from EIF and Bruno from EIB.
Thank you so much, Anastasia, and thank you so much for the invitation, actually, to react to these findings of the survey. It was mentioned before a couple of times. This survey is actually the only source of data for the microfinance in Europe, and not only it's the only source of data, but it proves limited, as Jaime said, but it proves the very good work that is done by the microfinance institutions on the ground and their outreach to low-income populations or to vulnerable groups. And if I may, before going into commenting on the funding needs, relating to what, or complementing to what Jaime mentioned earlier, I think we are, all the stakeholders, we are working towards making microfinance and social finance in general as a kind of a mainstream financial market. Seeing the numbers presented today, I think we are no longer the Cinderella of the financial sector. On the contrary, we are somebody that is proven to foster, to support financial and social inclusion through entrepreneurship. And I think this is the role of the sector and the role of the networks to show off, because you have all the reasons in the world to be proud of your work, and you should have show off your work and your results. Now, specifically on the funding needs, one of my surprises was that 58% of the responding MFIs do not need equity. And the other surprise, but probably something that should have been expected, is the very high heterogeneity of the funding needs for the MFIs. I think if we are looking into the graph, there are almost 10, if not more, ranges of the needs that are indicated by these MFIs. And this is only a proof of the variety, of the diversity of the players in this market. And I think another reason for this diversity of the needs relates to the business model. And probably it would be nice to consider for the next year's survey, going a bit deeper into this question and to understand the funding structure by type of institution, understanding the funding structure and the funding needs by geographical distribution. An NGO will not need equity by its legal structure. A large bank probably will not be that interested in the equity to be provided. But an MFI, a credit union probably, they will be interested not only in the funding to support their own lending, but also on additional equity, on additional capital strengthening product to support their further growth and further outreach to more entrepreneurs. Then, if I may, I strongly believe that the needs for different debt products like senior or subordinated loan should also be analyzed. Because in my opinion, a subordinated loan is the product that responds in a way to both funding needs of the institution, boosting the lending capacity on one side, and through the tier 2 or tier 2-like features of the product, the subordinated loans supports the capital strengthening and the deleveraging of the institution, which allows for additional funding, additional lenders to come in and boost their liquidity profile. I will stop here not to monopolize the discussion.
Thank you very much, Christina. Bruno?
So let's start with the funding needs. Maybe to demonstrate what I wanted to say, maybe we can go back to that slide if technology allows us. That was not foreseen, I can see. All the okay, so there, yeah, of course, is striking that 20% doesn't have borrowing needs or for the future. But the first exercise is that at least 33% need between 500,000 and 10 million, and 30 above 10 millions. Let's start with the 30% above 10 millions. And I did a very rough and absolutely not scientific calculation. Let's say that the average of these three categories, 10 to 30, 30 to 50, and above 50, is around 30 million. And this basically, if you multiply, creates or come up with a market gap only for this of about 800 million. If we do the same exercise for the category 500,000 to 1 million, 1 million to 5 million, and 5 million to 10 millions, there, and we say that an average would be 3 million, there we are almost 100 million. So a very quick calculation of a market gap of 1.1 billion, so which is huge, which is significant, which is important. I guess this figure is growing. Of course, it's very difficult to track because it's not the same basis for every survey. Let's move to the capacity building. And needless to say that not only EIF, but also EIB is more and more, and thanks to this survey, more aware of this market gap. Funding, let's go to the capacity building needs. Yeah, actually, this one is good. So I can see that capacity building needs are so related to digital transformation, green finance are among the most. And happy to say that a good portion, not only of these two, but also of the other bars, are somehow covered by the capacity building services provided either on a bespoke basis or through seminars and webinars through the Socially Inclusive Finance Technical Assistance Program. Maybe going to the next slide, it is important to say that if there are other needs, particularly from MFI, so I'm seeing low internal capacity to identify relevant impact, insufficient data quality availability, maybe to signal at the moment of entering into the SIFTA program for the MFI, to signal these needs, and will try to adapt, to be flexible within the SIFTA program to capture also this. The idea, and the same, if you go to the next slide, also, for example, in this case, facilitate peer-to-peer learning and capacity building to develop MFIs. These are already captured by SIFTA, but if there are other needs, my message is to signal at the moment of entering into the SIFTA program. Final comment, it was about the support of green finance. This is also covered by SIFTA, but this goes hand in hand with a comment that is important to underline in the second section about the progress of microfinance for green. So we haven't commented that. We can see quite an important progress of the green microcredits, and also of the services of the non-financial services related to green. So this also was not commented, but it was in the second section. So this my final highlights on this. Thanks.
Thank you very much, Bruno. We are perfectly on time. And related to green microfinance, I'm taking the opportunity to add a question from the chat. So there is a question from Lorna Duffy, who asks if there are any microfinance institutions that have implemented green finance really well, and if you could have a best practice example or a case study. I don't know if, I guess it's a question more for Nicola and Justina, or if other speakers would like to share. Yeah, Christina, sorry. Yeah, go ahead, Christina.
Thanks a lot for the question. I don't know if there is a clear green microfinance best practice, but what we have observed for the microfinance institutions that are doing rural finance or agri-finance, they are supporting certain, let's call them green practices by the farmers they are supporting, then they are financing. Probably we can indicate on separately, because the survey was anonymous and it has to guarantee the anonymity of the responders. But on a separate or offline basis, we can indicate one or another microfinance institution from both Eastern and Western Europe that have implemented this type of best practices for sustainable agriculture or sustainable biofarming.
Thank you, Christina.
Great, thank you.
Yeah.
And I mean, overall, what we've seen in the data is that the practices related to green microfinance and the offering of green microloans are particularly developed in the Balkans. So there historically there has been support, but as also the trend is growing, we can also see other examples from other countries that are more and more also presented in webinars and other conferences. So we can share some examples of some names of organizations that are particularly active in this field, if there's an interest.
Thank you.
Okay,
That's
thank
really
you.
helpful.
There is another question concerning the fintechs. So are the fintechs included in this survey or not? Yeah, I don't know who wants to answer this one.
I can answer. Yes, I can answer this question. Yes, they are included. We do not exclude them from the survey if they provide microfinance as we define business microloans or personal microloans. According to our definition, we include them in the survey, and we have a few fintechs covered in the survey this year.
Okay, and yeah, I guess they are not presented separately. Justina, correct me if I'm wrong,
No.
because it's not a legal status, right? We present by legal statuses, but fintech is a legal status.
Fintech is not a legal status, it's
Right.
a type of the delivery mode more than the type. It's usually a non-bank financial institution. So.
Okay, so they are included in NBFS.
Yes.
Okay. There is another comment concerning gender. So it would be interesting to see if there is data on gender, disaggregated portfolio, loan size. So to have statistics men versus women. I know that we have already many comparisons, but I know also that gender is an important issue, at least from academic perspective, and in developing countries, we have a lot of studies on gender. So that's why I think it's an important question. So if somebody would like to give their insights about comparisons by gender. Christina?
Probably my answer will be a bit controversial, but personally, I would refrain for making such a comparison in the microfinance or social finance field, because our target here is financial and social inclusion. So I would not discriminate in the loan amount, in the loan features, in the business development services, for if I do something different for women or for men. Because we want to be inclusive and to ensure the inclusiveness of all the excluded and vulnerable groups. That's on one side. On the other side, it is somehow obvious that the women need a bit of differentiated approach, if you want. And there are various MFIs, especially in the Balkans, that are doing a lot of business development services specifically targeted to women.
Okay, thank you. Thanks a lot, Christina. There is also a question on social impact and the key indicators, key social performance indicators that should be collected. I don't know if you have any insights to answer this one. So what are the key social performance indicators that should be collected?
Maybe I can take this one since I was critical about that. I mean, so far we limit the requirements for the CB lending, I mean, to output indicators, and there are certain social output indicators that are non-negotiable for us. So this relates, of course, to jobs created, jobs maintained. This relates to female entrepreneurship. And in general, the more of these, what we call vulnerable groups, we can be being targeted by an MFI, the more funding we can provide to support those groups. And these vulnerable groups we define in a certain way to what Christina mentioned. Christina mentioned the OECD Missing Entrepreneurs Report. So we see what the OECD calls the core group, which is the core age men who have lower difficulties accessing finance, and then all the rest. And all the rest are youth, older people, migrants, females. I mean, this is statistically proven, so we sort of focus those segmentations of those groups according to the data. But this is only, of course, about the outputs. It's not so much about the impact. When we speak about the impact, of course, there are a few European institutions that do carry out regular impact studies, and this is, of course, resource intensive. And we encourage institutions and we support them to technical assistance to do so. I see some institutions are present here in the audience today. And I'm also happy to say that we are working now with Professor Davide Castellani, who is also here, I see, in the audience, to come up with a sort of advice to MFIs on which sort of indicators and other types of things should be collected to really better demonstrate the social impact. Because what Jaime said, we look at the funding needs, 80% of MFIs need funding. And then when we see the social reporting, we see much lower numbers. But these really have to be connected, because who will support the MFIs? It will rarely be the profit-driven funders. It would mostly be impact investors, institutions, and so on. And all these institutions, all these people, they need to see impact. And so these two really must be connected going forward.
Thank you very much, Christina. Are there any other reactions from the speakers on any of the questions that we addressed here? I don't think so. I don't see any other questions in the chat, so let's take advantage of this time to see if there's anybody from the audience who would like to raise their hand and ask a question or comment on any of the findings or discussions that we had here.
Respond on the social impact. That was my questions. And the reason I asked for it is because we do collect and report on the information around vulnerable groups, which is something that we've been able to build into our system. But we've recently signed up for an impact assessment through the SIFTA program. And the data requirements for impact assessment under that are what I would class as onerous, and need to be taken at 2 different snapshot periods, which is very, very difficult because the nature of our clients, we generally don't build relationships with them, because we're a single product entity that provides assistance to unbankable businesses, and once they repay us, we're happy. We don't have a structure in place to build relationships. We don't cross-sell or upsell any of the products. So we really don't have that much interaction with them. So we don't monitor them other than their repayments once the loan has been advanced. So it's very difficult for us to get poverty indexes or to understand, how the actual impact has been, the impact of the money lent has been achieved over over a 3-year period, as it is in this particular case for this assessment. Yes, we can get that key data, but there's over 50, there's probably 60 or 70 data points that we need for this impact assessment, and just we don't have the resources, we don't have the systems to gather or monitor that amount of data.
Thank you very much. Is there any reaction to this comment?
So what we are trying to do now with a few of our microfinance clients, a few institutions, is that for some we have funded this sort of traditional social impact study that I guess Des was talking about, I suppose. So for this, of course, this is not ideal, but it gives a nice figure of social rate of return and all these things, and it's a nice tool for the MFI to have to really show their impact. But of course, this is not a perfect science, and this is not something that can be easily tracked over time, so it's not ideal. What we have been trying to do with a few others is to really redesign, use the digital systems to redesign the way they collect data. So the data that they have from all these different sources, governmental agencies, credit bureaus, everything that they may have, tax that they pay, and all these different things, to really remodel this data using social experts and IT people and financial experts to extract something that can be used for showing social impact better. So this is something that is now ongoing, what we're trying to do, and we'll see how this pans out in the months to come.
Thank you very much, Christina, for your reply. We still have time for one last question or comment from the audience, if there is any, either in the chat or if you would like to just turn on your mic.
Anastasia, sorry. I would like to, because I forgot before, there is something in the report related to capacity building that I think is very, very important. And it's that most of the organizations in Eastern Europe only provide personal development services. They don't provide business and entrepreneurship development service. So for me, this is a capacity building priority. We should focus to support the institution in Eastern Europe to develop BDS and the EDS. It could be with training. It could be training the loan officers with volunteers. And this is a work that we have to do through SIFTA, maybe through the networks, but we have to support the institutions there so they can make even better work on the support to the beneficiaries, not only with the personal development service, but with the business and the entrepreneurship. So this is a gap in the market, in the capacity building market, that we have to address, to me, as one of the priority for the future.
Yeah, thank you very much, Jaime. I also have a reaction in the chat along with the last comments on the social performance, that indeed it would be interesting to build a specific webinar where we discuss this important topic of social impact measurement. Yeah, I can see that we have MFIs which are willing to contribute, to share their experience. And even from the academic perspective, this is a very important question, how to measure impact and to have data, good data to measure impact. If there are no other questions, let me give the last opportunity to the audience. I guess we can wrap up here. So I would like to say thank you to all the participants in the webinar. It was very insightful for me to participate in this webinar. I think we all agree that the hot topic today for microfinance in Europe is really social impact, how to measure it, how to have standard indicators, help microfinance institutions to collect those indicators and report those indicators indeed. I also enjoyed the comparison that we had between North, Western, Southern Europe with the Balkans and Eastern Europe. It was really interesting to see how different markets evolve, and as mentioned by Christina from EIF, to see this diversity between different microfinance institutions. So I think we have a lot of food for thought after this very interesting session. I would like to thank all the speakers for this great debate, which personally I enjoyed very much. And of course, for those who are working behind the scene, such as Francesca Preve or Marie Clemence Andou, who participated to the development of this webinar and the survey. So please go ahead, I'm repeating myself, and visit the link to the report, because there is so much more information there. So please take advantage to use the links which are now presented on the slides. And if you have any questions about the report, don't hesitate to contact directly Justina or Nicola. So thanks again, everyone, and have a nice afternoon. Thanks a lot for attending.
Thank you.
Bye-bye. Thank you.
Bye.
Bye.
Thanks a lot. Bye.
Bye. Thank you.
Thank you.